everyone, and welcome to the Alternative Edge Report. I am your host, Olivia Vaz, and today we are going to dive deep into gold. Gold has been doing tremendous. It's been hitting record after record, but with a looming election and with the miners trying to play catch up, what is next for the shiny stuff? Today, I invited special guest John Feneck to weigh in on the action. John has a packed resume. He's the founder of Feneck Consulting Group, which specializes in miners and metals. He's made countless articles and appearances with Kitco. This gentleman has locked in an outstanding performance record. He is sharp in this sector. John Feneck, welcome.
Thanks so much, Olivia.
All right, John, let's get right into it. We have an election coming up, and gold can be pitted as pretty political. How will gold survive in a Trump versus Harris victory?
Sure. So gold is telling investors something right now leading up to the election, right? Because when you see markets, meaning the S&P at an all-time high alongside of gold, that's extremely rare. If you go back to the 70s, this really doesn't happen. So why is it happening? I personally feel there's two buckets of investors. One, like myself, that sees the world to be, kind of a scary place right now when you see the conflicts in the Middle East, see the conflicts in Russia, Ukraine, a potential third conflict, I think, brewing in Asia next year. You want to buy something that you will have in your portfolio that's tangible, that can be a hedge in your portfolio, especially after the run we've seen, Olivia, since March of 2009. I can't believe I'm saying that. I feel really old. But after a 15 and a half year run up in the S&P, up in the NASDAQ, et cetera, clients need to be thinking about more defense than offense, right? Try to retain some of the gains you've made in your accounts. And I think gold and silver both are great, ways to diversify portfolios. And that's one of the reasons I think you're seeing a bid. Obvious reasons would be that central bank, buying has increased, especially since February 2022, when Russia, started this, issue with Ukraine. We saw China's, consumption of gold, increase dramatically since then, being the, one of the two best, buyers of gold countrywide. Secondly, I think if you look at the average investor out there, the generalist investor, they're getting more interested in gold. I attend a lot of conferences, and I'm seeing more and more people getting on board with this narrative that, the world isn't secure right now. So getting to your question about the U.S. election, look, I don't want to get too political here, but I can say that both candidates are going to be good for gold, right? I mean, Trump has, said in many appearances that he's pro Bitcoin, pro gold, right? So he's pro alternative currency to the U.S. dollar, in our opinion. He wants, being a real estate mogul, I would imagine a lower U.S. dollar. That would mean lower rates, right? Lower rates would equate to lower U.S. dollar. So I think that he replaces Jay Powell if he gets in pretty quickly, the head of the Fed. And then you see lower rates in 2025 into 2026, and that's going to be bullish for gold. The other potential would obviously be a Harris win. Harris is not a proven entity, right, in terms of being president like Trump has been in the past. So there's going to be some concern around that. Gold loves uncertainty. So I think in a Harris win, you also get gold to continue to do well. So we're not in the camp that gold goes back to test, 1575 or even test 2000. We think there's a newer floor on gold. And that floor to me is around 22 to 2300.
22 to 2300. And you mentioned how gold can thrive with both either of these candidates into the office. We know Trump loves his gold. We've seen his mansions and his gold-clad mailboxes and all over. But you mentioned something interesting, that gold can thrive in uncertainty. We're seeing this run up in gold. Is it possible that we're having this buy the rumor, and that's why gold is increasing in prices, and then once the election's good and done with, we'll see it sell off? Is that possible?
It's possible. I think, though, more so that you'd see a knee jerk reaction down. Um, I think probably more so from a Harris victory, November 6th or 7th, right? Because don't forget, we've got the Fed on November 7th as well, just to add to the drama. But I think that that would be a short-lived correction, right? You've got tax loss selling coming up in all markets in November and December. So to see a move down from 2670 to something in the 2300 range wouldn't surprise me, nor would it be detrimental to the chart. I mean, if you look at the 15 to 20-year chart of gold, that would be a nothing burger in terms of a pullback, right? It wouldn't be great because gold equities would go down more, I think, than the price of gold because they have more leverage, right? But I still think that investors would stick it out. I mean, I wouldn't sell anything that I had if I saw $2,300 gold. I would just be buying more, especially on the gold equity side.
Dollar cost average. John, let's talk about why is gold at the highs?
Yeah. Um, I think it just goes back to what I was saying earlier, where I think people are just more concerned. People that have real wealth, like, look at Ray Dalio, right? Look at Jamie Dimon. These are people that believe in alternatives that didn't really pound the table on alternatives. Like Jamie Dimon, if you look at his early work going back just a few years ago, he was anti-Bitcoin, and now JP Morgan is all over Bitcoin. It's
hmm
really interesting to me to see the flip flop from people of size, right, that really matter. Look at what, I don't want to get off topic, but look at what Amazon did yesterday with nuclear. I mean, like, that was huge news in uranium. Uranium stocks, a lot of the ones we owned, were up 15 to 20% just yesterday. So you're seeing the whole commodities complex get really interesting, and gold's leading the charge.
Well, I'm kind of glad you went off topic there because that can be relatable to why we are having this new presence in gold, even looking at something like Amazon and nuclear. So thank you for bringing that full circle. But let's talk about, you have gold, that's the mothership, and then you have these miners and the mining stocks. Why are the
Mhm.
miners lagging? It feels like they are.
They are. There's a number of reasons, but if you look at GDX, which is the largest ETF in the space, it has over $15 billion in it. GDX is comprised of mostly producing gold companies. The top three holdings in GDX are Newmont, NEM, Agnico, AEM, and Barrick, GOLD. So when you look at those three holdings, Olivia, that represents just over 30% of the entire ETF. So obviously you want to know as much as you can about these names because they'll drive the performance of the ETF, right? And just for your listeners' benefit, I have a limited social life, so I have this memorized. Newmont on October 23 is coming out with earnings. October 30th would be Agnico, and then Barrick would be November 7th. So those are days I'd put in your calendar to kind of see how those stocks perform. Um, what we expect to see is better results than the market is anticipating, and it might not be the headline number. Like, if the estimate's 82 cents on Newmont, maybe they come in at 82 cents, but they talk about
hmm
their future revenue growth at
hmm
2,600 plus gold. I mean, these companies that I just named are going to be free cash flow winners, and that's what the market is missing, is that their earnings in January, April, and July have all been decent and improving. Imagine this quarter when you're able to clip a much better margin, right? Because the margins have increased for all of these companies. Like, let's take an Agnico, for example. Let's say their all-in sustaining cost per ounce, which is known as AISC, is $1,300 an ounce, right? Gold's at 2,600. The last quarter they came out with earnings, gold was at 2,300, right? So they're clipping a much higher margin. Now, have their costs gone up dramatically? No. Their costs have remained around 1,300, let's say. So you're just
hmm
making more money. And that's what the market's missing, is this ability to generate more free cash flow and better revenues going forward. So why, to answer your question directly, why hasn't it happened yet? Why haven't more people seen it the way I see it? It's because of the distraction of the broad market. That's clear to me. The S&P is
hmm
kicking butt. The NASDAQ is kicking butt. AI is kicking butt. Bitcoin's approaching 70,000. Like there's so many distractions right now. I've never seen a period in time dating back to when I started, in the dark ages in the early 90s that you could point to like this and say every asset class has a winner, and multiple winners in some cases.
Ah, the Merrill Lynch days back in the 90s.
Yes, that's
I did
right.
I did some digging. I did some digging, John. But you mentioned some quality. You mentioned some interesting things. First and foremost, we it's not just the election. We have earnings season coming for these individual miners. So that could be another catalyst. And as you said, if the guidance is good, right? Guidance is everything when it comes to earnings. That's what really can set a stock to go or a company to go higher in the market. We'll be on high watch for those. But you did mention some quality miners that you like. Can you repeat those? I saw Barrick.
Yeah.
What else do you like, John?
Yeah, so Newmont is the largest holding in GDX, and that's NEM. We own Agnico outright, in full disclosure, that's AEM. And then Barrick is GOLD.
All right. So again, we're going to be seeing some big moves in these miners coming up, everyone. John, here's a question that we get a lot when it comes to trying to get into the right price with gold. It's miners. We do have these major variables coming up that can change the future of gold and its counterparts. What do you tell people, or how would you guide someone who wants to get into gold? Should we wait for it to come in a little bit? Uh, how do you like to navigate the waves?
Great question. My answer is probably not going to be what people want to hear, but you have to align yourself with a professional. Like myself, it doesn't have to be me, but someone that can help you with your particular, desires and goals and risk tolerance, right? Not everyone is going to be a 20%, let's hold 20% of my portfolio in gold kind of investor, right? They may want to put 1 or 2% there, but they have no idea where to enter and they keep missing because gold keeps ascending, right? And so last year, for example, Olivia, gold trended at 1900 for 5+ months. It did not break 1900 an ounce on a closing basis for that long. So that was telling you something. That's what we call a basing pattern in technical analysis, right? And then it just broke higher from that base. Now I'm arguing that new base is 2250 to 2300 because we literally broke 2300, I think, once or twice in the last number of weeks. And so, to break 2250 to the downside, it wouldn't really matter to the long-term chart. But I still think that we're in such an uncertain period of time that it's not going to happen. So if that's the case, you want to be putting some buy orders out there at 2250 or 2300, right? That's your first buy. And then, you have a higher buy set, for gold, say somewhere between 2350, 2370 or something, just in case it doesn't get all the way to 2300 or below.
I love the technicals. It keeps you on the right edge there, and our heart rate a little lower when you have those ebb and flows in the market. Let's move on to who another big fan of gold is, and that is the Fed. Yes, everyone. Fun fact: the New York Fed itself has its gold stored right under Wall Street. I used to commute right over that back in the heyday. But what part does the Fed really play in this melt up of gold?
Another good question. So the Fed is, the Fed's behind the eight ball here. I think any major shop on Wall Street would tell you that off the record. And the bottom line is they just cut 50 basis points, which we called back in May, I believe. They are going to cut another 25 bips on November 7th. That's a 94.2% probability of that. So that's probably in the bag. It's more important, Olivia, for what is said after that announcement of a 25 bip cut in terms of the direction of future cuts, right? I think Powell is a former attorney, right? He's not a former economist. He basically has to be pragmatic and careful at these press conferences because all eyes are on him at this point, right? So I think the Fed is going to cut again, probably in December, and then probably at least once in Q1. And that would be very helpful to gold and silver, in my opinion. So, I mean, the role the Fed is playing going forward is going to be a helpful one to gold and silver, not a detrimental one, if I'm correct. Especially if Trump wins, because we all know that he's already shown his hand as president, and he will literally be tweeting people to lower rates.
Oh yeah, Trump tweets. That was a fun time to trade when we were back on Wall Street. And you're teeing me up for the next question. And thank you for doing that, John. You make my job easy. It's not just what they do; it's the after effect. What do they say? So, what would you say is your assessment of gold in 2024 and your prediction into 2025?
Sure. So we only look out, a couple months. Honestly, it's difficult for us to give that annual prediction, even though I'm asked all the time. So I'll do my best. For gold in 2024, we kind of see it playing out this way. You've got the BRICS meeting starting October 22nd. That ends the 24th. It's held in Russia. I think people need to be watching that, right? Because that may drive behavior in gold and silver. November 5th, that's the US election, obviously going to drive behavior. November 7th, that's going to be the next Fed cut for sure, in our opinion. And then December 19th, I believe, is the last Fed meeting of the year. So all of this is going to be important, along with CPI reads throughout the next couple of months, because the Fed continues to say, hey, let's watch CPI to determine that 2% objective, right? In 20, so my target right now, as we trade here at 2670 ish, would be that we could hit 2790 to 2800, I think, this year. And then next year, our target is right now a nice round 3000, because Bank of America is at 3000, Citigroup is at 3000. There's a lot of shops that are falling over themselves now to redo their estimates for gold, which is hilarious to me, because most of these banks have been traditionally wrong. So that's something just to keep in mind. But nonetheless, it's nice to see two of the top 5 banks coming to back gold here.
Well, that's why we bring in top intel from guys like you, John. We really appreciate your commentary, and thank you so much for coming on the show. It sounds like gold and its miners, while this market is crushing it, is the silent sleeper, and there's a lot of factors coming into play to push gold in that direction. John, thank you so much.
My pleasure. Thanks for having me.
All right, that was a fantastic conversation. Again, everyone, that is John Feneck of Feneck Consulting Group. Thank you, everyone, for joining us today on the Alternative Edge Report. Make sure to like and subscribe so you don't miss future episodes.